Hi, fellow traders. Welcome back to another edition of How to Really Grow a Small Trading Account, where I share some different strategies and different principles that you need to master in order to help you grow your account. Really, the key thing is managing your risk, but then there are other elements that's going to help you manage that risk. But I do say I really, really like working with you guys. I would love to work with you one-on-one. If you're not a member of the community, I'd love for you to join. Come in and join us. This is what I like doing. I trade with a small account every day. I start every month off with $3,000 in it. Last month, I almost made $5,000. And all of it I did in chat. Now there are days like yesterday, I made $755. And it was an awesome day, real active. Today, not so good. The price action just wasn't there. I tried a trade in the morning, wasn't paying attention quick enough to catch my first profit target. It just kind of tapped it and ran back and ended up stopping me out. And looking at the price action and just getting a feel for how the market opened, I stayed away from it because it wasn't conducive to my strategy. And I think I saved myself some money. I could have easily hit my max loss trying to trade a market that's not conducive to my strategies. And that's one of the things that you have to learn as a trader, especially one that has a small account and you can't really take, a lot of losses. You're going to have to accept some losses, but your risk is going to have to be managed correctly. And you're going to have to know when to stay out of the market. And I try to do that every day. So would really love for you guys to come in. If you're not part of the community, come in and check us out and see what we've got going on. So without further delay, let's get into our topic for today. All right, so today we're going to talk about filtering out the noise. And this is a problem that a lot of new traders have. I had the same problem when I started, and sometimes I still do have the same problem. And it's something that we have to, another one of these things that's going to take some discipline. Because we all want to find, the best information. We want to find the newest information, the freshest. We want, that secret tip that's going to give us the big bucks. But, really it's just a way of getting you in trouble. And, and as I think about it, we're looking at this RH, and let me bring it down here. We're looking at this RH and how it's taken off. How, and we were thinking, hey, we could have got in this when it first made its move. If I'd have got in at 53 when I saw it, after it started running up, there was a real good chance to get in at 53. I'd be up 16 points now. But this worked on this trade. What if I, come back tomorrow and I did the same thing? And, I lost a couple $100 in 30 seconds. And I tried it again and I tried it again. All because I'm trying to chase the stocks that are moving. versus sitting here trying to, establish myself as a trader. I'm letting all of this noise and everything come in. And sometimes it works, but it works 20-30% of the time. And we have to be smart about filtering and filter out the noise. So if we haven't realized it yet, we as humans are crazy. We're heavily influenced by our emotions. We have that instinct. We have these quirks sometimes that are irrational, but it's just part of us. Plus there's all kind of other forces that we deal with that affect us. We're much more concerned about not losing than making good gains. And that's why I try to teach the process the way I teach it. And I say focus on learning the skill and focus on executing the trade plan and not focusing on how much money you're making or how much you're up or how much you're down. All of that is just gets in your mind. That's just noise. And it causes you to make, dumb decisions sometimes. We also place more emphasis on new, fresh information, even if it's less important. Now, some information is good. We do want recent, up-to-date information on our stocks, but it needs to be relevant. And then we tend to make snap judgments, and then we rationalize them instead of thinking through our decision, in a logical manner. In the same way, we just looked at RH. That would have been an irrational, snap judgment for me to jump in it. And would have worked out. But it's not something that's going to work out every day. It doesn't work out every day. This may only work out 20% of the time, 15% of the time, which is a losing strategy. But it's not based on, a logical decision. I would have jumped in because I wasn't following this. Now, had I been tracking this all day and I did my research and I felt that this thing could blow up, that'd be a different story. But just making snap judgments, all of these things is what gets us in trouble. Not only as new traders, as experienced traders. Sometimes we get too comfortable and too confident, and we think everything we do is going to work out. And we make that quick, judgment, that quick decision. And then, that's it. So here's a Nobel Prize winner. I'm not going to Daniel. I'm gonna say Kahneman, because Kahne is Kane, like Casey Kane. So I'm gonna call this guy Daniel Kahneman, but he's a Nobel Prize winner, and he said we are influenced by completely automatic things that we have no control over, and we don't know we're doing it. What does that sound like to you? Does that sound like the stock market we trade every day? It is. We're influenced by it. The stock market, to us, it's like something automated that we have no control over. The only thing we can control is executing our plan. We can't control what the market does. So to us, it's an automatic thing. Now, if we were, there are some people that can move the market. We're just not in that position to do it. But as we've experienced over time, these completely automatic things can lead us astray in our decisions, especially in our trading, if we don't take our time and focus on what we're doing. Now, this morning was a perfect example of how not being able to focus 100% on one trade ended up losing me money, because I'm in 2 trades at one time at the open, which is stupid for me. Some people can manage it. I have dyslexia. That's not something that I can do. And I missed taking profit and ended up getting stopped out for a loss. And that was just too much noise. That was too much input coming in. Too many things for me to watch. And that's why I narrow my watch list down. And then at the open, I try to focus on 1 or 2 stocks. And then I try to pick the one that I think is going to set up. And, that's why you see me just focused on one stock a lot. Because I'm filtering out the noise. And like yesterday, once I focus and I get locked in on one stock, I got stopped out on the first move. But then after that, I was locked in. It just happened to push up and stop me out. And then I got back in because my plan was still in play. And I was able to trade that one stock all day. I didn't care what anybody else posted. I didn't care, about anything else. All I cared about was continuing to nail my stock. That's what it's about. So once you get in a trade, once you get locked in, you have to filter that noise out. You can't see if somebody's in a stock and it's moving faster than yours, then what are you going to do? Dump it and run? And then you end up losing out on that trade, the trade that you were in, and then you end up losing more money because you're chasing something that you haven't been working on. So what can we do about it? How can we fix it? That's the question. That's the $1 million question. And when we're trading with a small account, and we only have X amount of dollars that we can invest, and we're not able to refund it at will, we tend to get overly attached to it. And it's even more, we're focused even more on not losing versus actually nailing a winning trade. And that's another other noise that we really have to make sure that we filter out. So what do we consider noise? Everything that's posted in chat about this, that, and the other thing, if it's not pertaining to the stock that you're trading, it's noise. Now, if you're not trading and you're just in chat, then, hey, that's not noise. But if you're in a trade and you're reading stuff that has nothing to do with the stock that you're in, or has nothing to do with what's going on in your trade, that's noise. And you need to filter that out. Twitter is noise. I'll bring up TweetDeck, but I'll only have the Twitter feed on the stock that I'm trading. So like today, I was trading TRVG. Then in TweetDeck, all I have is the tweets coming up for TRVG. And in case you guys don't really know how to do it, I will share it with you if I'm logged in over here. God dog it. And I don't remember my login. Alright, here I got it. All right, so if you're up on TweetDeck, let me bring it up here. If you're on TweetDeck, and let's see, I've got, certain people that I followed. I like to see what's going on. Let's say I'm trading TRVG. All the tweets that have TRVG in them, they're going to come up. And I close, I just collapse everything, and I'm only looking at that. That's all it takes. So you're not looking at everything else that doesn't make sense or that has nothing to do with what you're doing. You're only looking at tweets that pertain to your stock. And then there's certain, like CNBC or certain people that if they type something about that stock, they're the only ones I really care about. Sitting watching CNBC and the news all day, following other traders, trying to trade what they trade, and not having anything for yourself. And the so-called gurus. There's a lot of those out there now. I mean, I've noticed a lot of people, I guess in the last 6 months, that are trying to, show or try to teach people how to trade small accounts. And, I look at them, I listen to see what they're saying, but a lot of times it's stuff that just gets you in trouble because it's not sustainable. They'll come, they'll be there for a couple months or sometimes a couple weeks, and then they're gone. Because what they're doing is not sustainable. Or, some won't show you themselves trading, live. So you don't really know what they're doing. So all of that's really noise. And you kind of have to filter it out. Now you have to find people that think like you think, that produce good content that makes sense. And those are the people that I follow on Twitter. Those are the ones I have up on TweetDeck. Those are the ones who I let their stuff come through because we have similar thought processes. We may trade a similar strategy. We may not be identical, but our thinking may be the same. That's not noise. You're filtering out the stuff that doesn't make sense. That's the noise. So all of these things and anything you could think of that distracts you from your trading is going to be considered noise. And you have to get rid of it. So why filter it out? The thing is, we have two goals: to make smart decisions based on, the risk reward parameters that we set, and to be consistent with what we do. And we have to have a strategy or some type of approach to the market that's going to help us, that we can follow, that's going to allow us to filter out the noise. And that's why you don't see me trade other strategies. I have what I trade. It works. I know it works. If you follow the rules and you do the things the right way, it works. You make money. I do it every day. And I'm not going to change the way I look at things. I'm not going to change the way I do things because I'm hearing or I'm reading what somebody else wrote. I'm sticking to my strategy. Now, if my strategy starts to prove that it's not working or things aren't doing what it's supposed to do, and I may need to come back and look at different things, then I'm going to open it up for discussion. But as long as, I'm over 60% profitability or 60% win-loss ratio and I'm profitable, I'm not going to change anything that I do. No, I'm going to keep going. So every strategy or any strategy that you trade, you want it to have some type of an edge. It's got to be something proven or set up, something that happens every day that can give you a chance to make money every day. Now, whether the setup matures, that's going to be different. The market conditions may not be ideal. Like today, for the better part of the day, the market conditions just weren't there. To me, they weren't tradable with the strategies that I like to trade. We were getting very little follow through. But then the last 30 minutes, the market seemed to do, something different. And, stocks we were looking at going one way, turned around and went the other way. And that's kind of what it's been doing all day. Or just, not really following through, making the bigger moves. You're going to have days like that. So that's why you got to have a strategy. You got to have rules so that, okay, this may be setting up, but the overall market's not conducive to what I'm doing. So I need to stop. I'm not giving any money back. I'm here to make money. I'm here to make a living. So, you got to be smart about it. So whatever strategy you trade, whatever you come up with that works for you and is consistent, you stick to it and you stay with it and you just continue to profit. Don't get greedy, because most of these are scalable to a certain extent. If I made $2,000 or $2,500 a day, I wouldn't want any more. I'd be happy with that. Because there are going to be other days where things just take off and I may double that. But I'm not going to go out trying to double it every day. I know the strategy that I trade is scalable. I can take more shares, take more shares, take more shares. It'll allow me to make more money. Yeah, my risk will be greater, but my reward would be, that much greater. All right. So how do we do it? How do we stick to a strategy if we as humans by nature aren't consistent and are affected by this glitz and glamour that is flashed in front of us every day? All these automatic forces that we come in contact with that's going to make us poor. It's simple. It's just having a checklist. Having a checklist for your strategy so that if a stock sets up, does it meet A, B, C, D? If it does, take it. Or it might make A, B, and D. C might not be there, but it still may be worth taking. But you've gone through the checklist and, most of what you have on that list is checked off and you would feel good about trading it. And likewise, it'll keep you from taking trades that you shouldn't take. But then again, like today, TRVG was setting up beautifully pre-market. It was setting up beautifully. Let me bring that chart back up real quick. Okay, you can see down here, it was setting up beautifully right here at 8 o'clock. This is the exact strategy that I like to trade every pre-market. You know, a stock that has been rejecting VWAP, we, moved down. We tried to push back and test it again. Everything is trending down on it. Here was the entry right here. This candle right here. And when I was going through my checklist, the RSI was below 20. So with the RSI being below 20, that is one of the no-goes for me. That if it's below 20, I'm not going to short it. It's a no-go because it's probably going to be limited downward potential. Likewise, if I'm going long, if it's over 80, I'm not going to take it. Because I think the upward potential is going to be restricted. But in this case, it just so happens that on this day, this thing made a strong move down. And, I didn't take it because of that. So I was already irritated because I missed the potential, $250 to start the day off with. I stayed locked in. I take the stock on my strategy, 5-minute opening range low. And at this time, the RSI was above 20. And so based on what I saw here, I'm like, this thing can still fade. And it failed. And so, I failed to take profit on this when we got the quick dip because I wasn't paying attention and I missed out. Ended up getting stopped out. But the key is I had a checklist. I went through it, and it's not going to be perfect. It's not going to keep you out of bad trade. I mean, it can keep you out of a good trade, but it's going to keep you out of 3 times more bad trades than it does a good trade. And that's what we're looking for. We're trying to we want to be right, 70, 75% of the time. That's my goal. And if something proves to be, right less than 70% of the time, I'm not going to deal with it. I don't want to mess with it. But that's where my checklist comes into play. Alright, so just like a pre-operation checklist, we should break our approach down into a series of simple steps. A couple of them I have go or no go. Is it, if it hits my scan, is it under $10? Yes, no go. Is it over a billion share float? Yes, this is no go. If it's below a 20 RSI or above 80 RSI, yes, it's a no-go. If I'm going long, if it's over 80 and I'm going long, it's a no-go. Obviously, if I'm going short, it would be good to go. But, I have those. And those are the easiest things to have. It's either go or no-go. Then you go through your checklist and you say, hey, if this has a no-go on this particular thing, then it's not tradable. It just makes it that simple. If you follow it. Now, some days I feel the pressure of having to take a trade and I don't follow it. And I do something stupid. But for the most part, if I follow my trade, follow my checklist on my strategy, then I'm going to be fine. That's why you don't see me looking at or trading stocks that aren't on my scan. Somebody may say, hey, look at this stock. Now look at it. Yeah, it looks good. It's not on my scan. I'm not trading. That's part of my go, no go checklist. All right, so a checklist, it doesn't restrain us, and it doesn't prevent us from exercising judgment or being creative. It's there to help us as we approach a potential trade, and it helps us stay logical, rational, and will help us, not forget an important step, or not to forget to look for something. There was a time where I was taking reversal trades, and I would forget to look at the spot to find out which direction is the market going, because that's going to help me in determining my profit targets and my position sizing and all of that. And I had to write stuff down so that I didn't forget about it. I had to have a checklist to make sure that I checked everything. Now, I know it sounds like it takes a lot of time, and it will at first, but if you practice in the simulator, just like I talked about last week, I think I put the recording up this weekend, but I talked about how we practice in the simulator and how we need, practicing developing your trade plans, practicing on the simulator at night, writing them. The better you get, the faster you get. And you can whip it out without even thinking about it. It doesn't take you any time. So following a checklist would only take you seconds to go through. And then you can make your decision. And it's based on a logical, rational approach. And this approach frees up the mental resources that we have. And remember, I told you before, our mental resources are limited. How much mental energy we have is limited. If we use it all up, very quickly, then our day is not going to go very well. So the more things that we can have automated, that we can do without even thinking about it, it's going to help us make good decisions. It's going to help us make good trade decisions, and in turn keep us from losing all our money. All right, does anybody have any questions or any comments? Let me see. Because I know a lot of you guys suffer this. A lot of you guys suffer from not being able to filter out the noise.